the point to think about RI or alternative instruments will be when you have reached your FRS, $213,000 this year.
Also, once I reach, I can consider.
You can consider.
Doesn't matter how old I am lah.
Yeah, because you cannot. You can't top up any more to your CPF. Okay, just a limit. Okay.
Welcome to today's episode of 10 Must-Know Insurance Tips Agents May Not Tell You. I'm Jayla, Experienced Specialist, and this is Eddy, Haven CEO and our favorite insurance expert. At Haven, we believe that insurance advice should be clear, not confusing, and always aligned with your needs. I'll ask all the questions that we always wanted to ask to Eddy, and Eddy will answer them with no jargon and no fluff. I promise I will keep asking until I get it. So let's dive into today's topic. So today we'll be talking about retirement income. So mainly I want to know a little bit more regards what is the difference between CPF LIFE and Private Annuity and how to actually boost my income for my retirement.
Right.
But before that, can I understand a little bit more? What exactly is CPF? Like I know CPF, but what is CPF LIFE?
CPF Life is actually a retirement income scheme. It's a national scheme for CPF members to create an income stream when a person enters into retirement.
Okay.
All right. So how much you have in your CPF Life, okay, which begins from 65 onwards, it really depends on how much you have in your RA account, your special account.
Okay.
All right. So today, if you turn 55, all right, and if you have 213,000 in your special account.
Okay.
This 213,000 is actually what I call a full retirement sum amount.
Okay.
With $213,000 at 55, it would translate to about $1,700 a month. All right, you get $1,700 a month from 65 onwards, all the way to as long as you live. So this income stream is something that you can depend on as a retirees. It provides you peace of mind so that you have knowing that you have funds to pay for your retirement.
Okay, so the CPF top-up actually helps me with more retirement income, or am I just like topping up into CPF or am I just locking my money in CPF forever?
Yeah, so that's a very good question. I mean, because now as you work as a salaried staff, right? As you work, you actually contribute to your CPF.
Yeah.
And particularly your special account. All right. So this special account will continue to grow until 55 years old.
Yeah.
Right. So there are ways you can boost it to supercharge it. You can actually do CPF contribution, voluntary contributions. It makes a lot of sense because if let's say you're paying taxes, income taxes, you can actually enjoy about $8,000 tax relief if you do a contribution into the CPF voluntary.
Any CPF just CPF in general.
CPF, or you can actually go directly to the special account.
Oh, okay.
Since you are building for retirement, right? You focus into the special account.
Okay.
Alternatively, you can actually transfer your CPF OA, ordinary account, into a special account.
Okay.
And this transfer makes sense also because CPF special account is actually paying more interest, 4% versus OA 2.5%. Okay. So by doing that, you're actually helping your SA to grow faster, turbocharging. And then at 55, you have enough money to provide a sustainable income stream for retirement, a better level of income for your CPF life.
So you mentioned about the tax relief, right? So does it mean if I need to top up with my cash, then into CPF, any of the OA, MA, SA, RA account, or it can be CPF OA to SA, I also get tax relief?
To enjoy a tax relief, the contribution must be from cash.
From cash.
For internal transfer OA to SA, there's no tax relief for this.
Okay.
But one thing to note is that when you do a voluntary contribution, when you do a transfer, it's irreversible.
Okay.
Meaning that you cannot change your mind and then reverse back. Okay, take out the money what you put in.
I cannot take it out as a cash.
You cannot.
Okay, that one.
Because the whole spirit behind is that you are building retirement, and this locking it mechanism helps to build your retirement.
Okay. Yeah. So just now you mentioned about SA, right? SA account. When you are 55, then the money will go into your RA. Then 65, your fixed income will come from the RA, correct? Now that there's this recently, they say there will be a closure of SA account. How would this affect like people? Let's say me maybe when I'm 55, how will it affect me?
Yeah, it does affect because in the past, all right, what happened is that your special account can continue even after you cross 55.
Okay.
All right. So special account pays you 4%. So what some people does is that they put money or they keep some money in their special account to grow at 4%, because 4% is a very high guarantee rate. You can't get any instrument that pays you this amount of money.
Yeah.
All right. So some people take it as like a fixed deposit that gives 4% interest, and as and when they need money, they just go to a special account and take it out. But come this year, it's no longer possible. When you turn 55, your special account will close. Okay?
No more.
And the money will be transferred to RA. Okay, and if the amount is more, if your SA is more than $213,000, the excess of money will be transferred to OA. All right.
Okay.
Okay. So instead of earning 4% SA, now the money excess
2.5
go to OA to earn 2.5%.
So it will affect my overall return. Compounding.
So beyond 55,
money.
Beyond 55, you cannot no longer be able to earn the 4% interest on your CPF.
That's quite sad lah. Okay.
Yeah.
So other than CPF, right, I have heard a lot of maybe other options to get like a retirement income, such as private annuity. Maybe can you help me understand a little bit what is private annuity and how do we actually choose a private annuity?
Yeah. So this is a very popular question. All right. So beyond CPF, what are the alternatives? So private annuities is one of the key instrument, okay, as comparable to CPF LIFE. Okay. All right. So the thing about CPF, the private annuities private annuities is that it works similar to CPF LIFE in that you need to put in a lump sum of money or a contribution to build the funds, and then at some point in time you can draw the money, whether is it for a fixed period of time or for life.
Okay.
Right? But the difference is that this is managed by private companies, specifically insurance companies. It's not managed by the government, not by the CPF board. So it's a private company that actually provides that, number one. Usually it's insurance companies. The amount of premiums can be lump sum or regular premiums contribution. Okay, and because it's a private insurance company, there's a lot of flexibility you can expect from this plan.
Customized.
You don't have to be fixed at 65 years old for a payout. Okay, you can bring it earlier. Okay, and you, as an insurance company, they also can offer additional benefits, insurance benefits into the plan. So for people who wants to have, let's say, a death benefits, death bequest to give more to the beneficiaries, there are plans that actually offers that.
Okay.
There are plans that offers also extra payout in the event of disability, which is quite probable where a person is retiring as people live longer. Yeah.
Okay. So you mentioned that because private annuity is obviously from private insurance, is there any warning signs maybe I should look out before I purchase one?
I think the warning signs you mean will be how do I find a plan that is suitable for you? Right? Yeah. So yes, because it's so flexible, there are all shapes and sizes of retirement income in the market. So if you're looking for retirement income, it's always good to source around. Don't just fix to one company, just compare, because different companies bring something new to the table. All right. And when you're considering these plans, it's always important to ask yourself what is most important to you. Is it having the income, maximum income, the most important? Do you want the payout to be earlier? Because some people want to retire much earlier, like 60 or so, before 65. All right. So having a plan that actually fulfills the requirements is actually very important. Otherwise, if you want to retire at 60 and the plan pay out later, so it doesn't really gel. All right. Why? Okay. Yeah. So understanding that is very important.
Yeah.
And understanding what kind of benefits you want. Okay. Some plans bundle a lot of additional benefits like death cover, disability cover, which may not be what you want. Okay.
But still I pay.
Yeah. And the thing is that with all these benefits, it actually cost money. So your plan becomes more expensive. Understand what you need is very important. And the last thing worth considering is that you want to find out for every dollar that you put in as premiums, how much are you getting back at the end of the day?
Like what is my
what's the payout?
Return
payout versus what you put in.
Okay.
So obviously you want to get as much payout as possible versus what you put in. And secondly, because it's an insurance company, not CPF, they cannot guarantee the
my payout.
But
not all lah.
Not all, okay?
Okay.
So insurance company will guarantee a portion.
Oh.
Okay. So as you look for these insurance private entities plans, right? Consider one that fits your needs, one that has reasonably high payouts, and one with reasonably high guaranteed projection, guaranteed values.
Guaranteed
Yes,
values.
That's right.
Okay. So I would say private annuity is good. CPF Life is also good. So which one would you think is better for retirement? If you have to choose one.
Okay. So
Or which one would you think that is? Because CPF Life, like you say, government, right, more secure. Then private annuity, there's also risk, but also there is also some like you can customize. So which one is it actually better?
I think CPF Life is actually a big rock in your retirement plans. Okay, and there are many reasons for that. Firstly, because you are still very young, fairly young, building on your career. You know, there'll be a lot of cash flow needs. You know, committing to retirement plans right now could be too much commitment. All right. So contributing into CPF is better. Okay, if you have extra money, you contribute to CPF. As and when you have a bonuses, you want to put in, you can put in. You can actually delay and then put in again subsequent.
When I feel
years,
like
you feel like it. Okay, so it's voluntary.
Okay.
And secondly, when you top up into CPF, you also enjoy a tax relief. I mentioned just now $8,000 per year. Okay, so it helps to reduce your income tax. Okay, and thirdly, CPF's Life provides a very high level of interest rate and guarantee, 4%. Okay, so what this means is that when you build your CPF for you, the first priority will be to build a CPF.
Yeah.
Okay, you should try as much as you can. You have spare resources to build a CPF up to the prevailing full retirement sum.
Okay.
Okay, which is $213,000. Okay, so after you have built the $213,000, you can't put in any more. Okay, the CPF has a limit before age 55.
Okay.
So once you reach the limit, and if you are still thinking of building a retirement funds, okay, then you consider retirement income plans.
Then I consider.
Yes,
Okay. So you will advise me, my situation like I top up into my full retirement scheme, into CPF SA first until I cannot top up
level.
Some. Then the rest of the cash, if I have enough cash left after I top up everything, then I can consider private annuity.
That's right.
Okay. So if in this case, right, does private annuity have any like secret benefits that CPF Life doesn't have, or CPF Life is the best annuity?
In terms of the projections, the payout, CPF Life is probably the best really.
Okay.
Because of the interest rates, and it is backed by government. All right, so that is very high credit rating. All right, so but CPF Life has limitations. Firstly, it is because its national scheme is fairly rigid. Okay, you can't have the payout before 65. All right.
True.
There is also a limit to how much you can put in. Okay. Beyond that, if you want to put in more, you can't. All right. And also for CPF Life, you couldn't adjust how much you want to enjoy in the early years. Okay, because it is meant to be distributed throughout your life.
Fixed.
Okay, so there are, or it can be increasing also, but it is, you can't customize the amount, the time horizon. All right, so there are limitations, and because it's a national scheme, and where the private entities comes in handy is that if you, let's say you can actually customize it together with your CPF to be something that works better for you for retirement. So for example, the retirement incomes allows you to have earlier payout if you wish to retire earlier. So you can actually get a plan that do that. Okay, and for some people, they may want to have more income during the active years. Active years are typically any time from retirement age to before 80 years old. I mean, this is a time whereby people tend to travel a lot,
more free time,
more active. You know, after 80, they don't feel like traveling anymore. So they want to have more income during this period of time. So this is where the retirement income products can come in handy. Can actually boost the amount that you need within certain parameters that you set.
Okay, then in this case, right, if I do have enough money, when will be the best time for me to actually like buy a private annuity plan to, come with my CPF Life?
I think if you are 55, if you're younger than 55, I think that is the point to think about RI or alternative instruments will be when you have reached your FRS, $213,000 this year.
Also, once I reach, I can consider.
You can consider.
Doesn't matter how old I am.
Yeah, because you cannot, you can't top up any more to your CPF. Okay, that's the limit. Okay. But after 55, you can actually increase your CPF RA.
After 55?
So for $213,000 to $426,000.
Two times lah.
Yeah, 2 times. You can actually increase more. The benefit of increasing more is that the CPF life payout will increase proportionally. I mean,
2 times also?
Thereabout.
Okay.
Yeah, thereabout. Okay, may not be exact. Thereabout.
Okay.
However, because when you put into a CPF RA account, you cannot take out the money anymore. Okay. So when you go beyond the FRS, you have to consider a few things. Firstly, is this all the money that you have? Okay, if this is all the money that you have in the CPF, means all your retirement money is in CPF, then you may want to consider not putting so much in the CPF, because when there's emergency, you cannot liquidate.
True.
Okay. But if let's say you have a lot of money, CPF is just a portion of it, then it's fine to max up to the highest limit. The enhanced retirement sum, which is $426,000. Okay, you can do that.
Okay.
So there are a few considerations you do, and it really depends on your cash flow needs. Yeah.
Okay.
But for you, if you're still working before 55, I think you just max out your CPF full retirement sum first. Yeah.
Top up full, then I consider private annuity.
Yes, right.
Okay, makes sense. So now I will maybe think about it in the next 3 or 4 years. Now, not the time for me yet.
Yeah. Another thing to take note is that retirement income is just one piece. It's an important piece, just one piece of the whole retirement planning considerations.
Yeah.
Because when a person is in retirement, typically there are also other risks that will increase the cash flow needs. Okay. Things like when there's a medical crisis, hospitalization or long-term care, when a person is disabled, there need to be caregiving costs. Okay. So these are also important piece. You need to consider, because otherwise, when this happens, your retirement income may not be sufficient.
For me.
So when you think about retirement, you need to consider having a strong safety net to substantiate your retirement income.
Okay, we talk about this next episode, okay?
That sounds like a good idea.
Okay, so thank you so much, Eddy, and thank you guys for watching. We've reached the end of the episode. Please like, share, and subscribe, and turn the bell on so you will always receive notification when we post a video. And if you do have any question, please comment down below. Thank you. See you next time. Welcome to today's episode. So which one is better for my retirement?
Until I forgot my points. It's very high. Whoa! Yeah. I know I got something I want to say. Wait.
Okay, let's go. Start again.
When you can...
Downhill.
That's